Hello and welcome back to another video relating to stockholders equity section. In this video, we're going to work on an exercise in which we have two types of stock, common stock and preferred stock. And we're going to see how the dividends is going to be allocated between the two groups of stockholders. So let's take a look at the exercise. So here we have a company that's organized on Jan 1st, 2021. During the first year of operations, they've issued 2,000 shares of $50 par value preferred stock and 100,000 shares of $10 par value common stock. At December 31st, the company declared the following cash dividends. So 2021, 2022, and 2023, for 3 years, they paid out dividends. So they've given us two different assumptions. The first one they're telling us, show the allocation of dividend to each class of stock, assuming the preferred stock are 6%, the preferred stock dividend is 6%, and they are non-cumulative. I'll explain that in a second. And the second, they tell us, assume that the preferred stocks are cumulative and their dividend rate is 7%. So let's start out with some basic information over here. Identifying the information. The type of stock I have common stock and preferred stock. So I'm concerned with these two classes of stock, and obviously for part A and part B, that's going to be the same. What's the par value of the shares for each of these? So again, it stays the same in both cases. So let me highlight that. I have $50 par preferred stock and $10 par common stock. How many are issued and outstanding? Those are the ones who are going to get the dividends. So again, it's the same for both in both cases. I have 2,000 shares of preferred stock and 100,000 of common stock. Now that part is all the same. What's different now is the dividend rate. The rate of dividend for the preferred shareholders, in the first case we've said is 6%. In the second example, we're saying it's 7%. Okay, so for preferred shares, they have preference to dividends and in the event of liquidation. Now we're looking at dividends. So we're saying each shareholder that has a $50 share is going to get a 6% dividend on that. We have 2,000 shareholders. So how much dividends will be paid out each year to the preferred shareholders? $6,000 in part A. If we change the assumption to 7%, it's going to be $7,000 in part B. Now, what's the notable difference between these two? In part A, they're telling us they're non-cumulative. In part B, they're telling us they're cumulative. So what does that mean? Part A, cumulative, part B, non-cumulative. Cumulative basically means that when dividends are paid, the preferred stockholders first get $7,000. If it is not paid, any or all of it, it carries over into the next year. And the next year when dividends are paid, the company has to first pay dividends to whatever is outstanding from the previous year and then for the current year. If they're non-cumulative, it's basically if there's money and dividends are paid out, first 6,000 goes to the preferred stockholders. If nothing is paid out, well, then they get nothing for that year. Each year starts fresh. There's nothing carrying over into the next year. So let's see how it works out in this case where we have the dividends for the 3 years. Again, those numbers don't change. They've told us that number stays the same for all 3 years. And the amount that is being paid out, the total dividends, is 5, 12, 28. So that number stays the same. Now what are we concerned with? How much goes to the preferred stockholders and how much goes to the common stockholders? And the major difference is in part A, we are saying they're non-cumulative. In part B, we are saying they're cumulative. Again, non-cumulative means each year if dividends are paid out, preferred stockholders get 6,000, up to 6,000. Anything below that, if they don't get it, they don't get it. Here we are saying it carries over into the next year. So let's see what happened over here. In the first year, a total of 5,000 was paid out as dividends. The entire 5,000 is going to go to the preferred stockholders. What do the common stockholders? What do they get? Nothing. Okay. The second year, how much will they get? Preferred stockholders get a maximum of 6,000. The remaining 6,000 will go to the common stockholders. The third year, 28,000 is being given out as dividends. Common preferred stockholders again, they get the 6,000. 22,000 minus 6,000, common stockholders are going to get 22,000. So the real difference between the two is the preferred stockholders are guaranteed a 6% rate of return. If the year is good and the company is paying out more in dividends, if you're a common shareholder, you stand to get more. Now, let's take a look at if they were preferred. The first year, only 5,000 was available. All of it went to the preferred stockholders. Common stockholders got nothing. The second year, when dividends are paid out, 12,000 is paid out, what happens? The preferred stockholders are going to get 7,000 for the second year, for the current year, plus 2,000 from the previous year. So they're going to get a total of $9,000. Again, they were supposed to get 7,000 minimum each year. They got only 5. So 2,000 is carried over into the second year, and that's what they get. How much do the common stockholders get? Well, whatever is left over. In this case, it's $3,000. 12 minus 9 is $3,000. Now, is anything in arrears? Arrears simply means outstanding. Nothing is in arrears. So in 2023, when 28,000 is paid out, how much will the preferred stockholders get? They get their $7,000. What do the common shareholders get? Whatever is left over, in this case, it's going to be $21,000. 28 minus 7 is $21,000 is what they're going to get. So once again, always first look to see how many shares are outstanding, issued and outstanding. Those are the ones who are going to get this, the dividends. Preferred stock, look for the rate at which they're going to be compensated, the dividend rate, and that's what they're going to get. If they're non-cumulative, well, they either get it or they don't, and that's up to it each year. If they're cumulative, if they don't get it or any part of it, it carries over into the next year. And the last part they've asked is to journalize the declaration of dividends at December 31st, 2023 under Part P. So over here, they've asked us for a journal entry relating to these numbers over here. So let me put that in a different color here. So December 31st, 2023, retained earnings is debited, and we're going to credit dividends payable. We know exactly how much is going to each of these groups. The two classes of shareholders. So 28,000 total is paid out as dividends, is going to be paid out as dividends. So retained earnings is debited. Preferred stock will get 7,000. Common shareholders will get 21,000. So once again, if a company has two classes of shares, common and preferred, for the preferred, look for all the details. Whatever is left over goes to the common shareholders. So with this, we are done with the dividends. In the next exercise, we're going to look at the balance sheet presentation.